Let's get real. Have you ever watched a stock or crypto explode and thought, I knew it, I should have bought in? That moment hits hard, doesn't it? It's like a punch to the gut, seeing something you considered just days or weeks ago suddenly skyrocket while you're left on the sidelines. You replay the decision in your mind, wondering why you didn't act when you had the chance. That sting of regret? It's not just about money, it's about missing out because you hesitated. It's about the opportunity that slipped through your fingers, the feeling that you let fear or doubt hold you back. It's a pain that lingers, making you question your instincts and your ability to make bold moves. We all know someone who ignored Amazon in the 90s, thinking it was just another dot-com fad. They watched from the sidelines as it grew from a tiny online bookstore into a global giant, wishing they'd taken the leap when it was still a risky bet. Or maybe you've heard stories of people who lost their Bitcoin wallet, or forgot about a few coins they bought years ago, only to realize later what they'd missed out on. The regret isn't just about the lost money, it's about the lost possibility. These stories all start with hesitation. That moment of doubt, that pause before clicking buy, is where most fortunes are lost, not because of bad decisions, but because of indecision. Most people wait for certainty, but by then, the real opportunity is gone. The market doesn't reward those who wait for every signal to turn green. By the time it feels safe, the upside is already priced in. The biggest gains happen before the crowd catches on, when doubt is high and attention is low. That's when the seeds of wealth are planted, in the quiet moments when everyone else is looking the other way. We're wired to follow the crowd, but in investing, that's backward. The crowd is usually late to the party, chasing trends instead of spotting them early. When everyone's buying, prices are already high. The excitement you see on the news is often a sign that the easy money has already been made. The early movers are the ones selling to the crowd. They're cashing in while everyone else is just getting started. They acted on research and conviction, not mass approval. They trusted their homework, their gut, and their willingness to be different. Next time you want to wait for more certainty, remember that regret. Remember how it feels to watch an opportunity pass you by because you waited for everyone else to agree with you. In investing, being early is everything. It's about having the courage to act when others are still skeptical, to see the potential before it's obvious. It's not about perfect timing, it's about seeing potential before it's obvious. The best investors aren't fortune tellers. They're visionaries who spot trends before the world catches up. The courage to act early is where life-changing returns are made. It's about making bold moves when others are still doubting and trusting your own analysis. Don't wait for the crowd to validate your decision. If you do, you'll always be a step behind. Trust your research, not the noise. Block out the distractions and focus on what you know and believe. That's how you avoid the pain of what if, by acting with conviction, not hesitation, and by daring to be early when it matters most. Every great investment starts quietly. It's in these silent moments, away from the noise and excitement, that the seeds of future success are sown. The world isn't watching yet, and that's exactly when the most important decisions are made. Before a company or crypto makes headlines, it's in the building phase. Low price, little hype, and lots of doubt. The market is calm, sometimes even stagnant, and only a handful of people are paying attention. Most people dismiss it, mistaking silence for lack of progress. They see the absence of buzz as a warning sign, not realizing that real growth often happens out of sight. But this quiet is a filter. It weeds out those chasing quick wins from those who see the long-term vision. It's a test of patience and conviction, rewarding those who can look beyond the present moment. Groundbreaking ideas are rarely popular at the start. Innovation is often misunderstood, and early believers are few and far between. Airbnb and Tesla were both doubted in their early days. Their visions seemed unrealistic to many, but those who looked deeper saw the potential beneath the skepticism. The risk feels high, which keeps prices low and the crowd away. This uncertainty is uncomfortable, but it's also where the biggest opportunities hide. Smart investors seek out this quiet. They accumulate before the noise. They know that by the time everyone is talking, the best gains are already gone. They buy based on fundamentals, not hype. They study the numbers, the business model, and the team, ignoring the distractions of the daily news cycle. They're comfortable being early, even if it means being alone. They trust their research and intuition, knowing that conviction often requires solitude. This is when the seeds of big returns are planted. Early action taken quietly can lead to outsized rewards when the world finally catches up. The quiet phase is your chance to get in before the storm of public interest. It's a rare window, open only to those willing to act before the crowd. Don't mistake obscurity for lack of potential. Sometimes the most overlooked opportunities are the ones with the greatest upside. The best opportunities are found before the world catches on. Move before the headlines, and you'll be positioned to benefit when the storm finally arrives. After the quiet phase, momentum builds. A milestone, a partnership, or a shout-out sparks attention. Prices tick up, more people notice, and suddenly FOMO kicks in. The crowd rushes in, buying not from research but from fear of missing out. This buying frenzy pushes prices even higher, attracting mainstream attention. Latecomers buy at inflated prices, taking on the most risk. Early investors who bought during the quiet now have the power. They can sell for massive profits. The late crowd is left hoping the hype continues, but they're the first to panic when prices correct. The cycle repeats. Early conviction wins, late FOMO loses. Don't be the last one in. The real gains go to those who moved before the rush. Act before the crowd, not with it. Hype acts as a powerful accelerant in the markets. It can send prices soaring at a dizzying pace, often far beyond what the underlying fundamentals justify. When hype takes hold, rational analysis is often left behind, replaced by a wave of excitement and speculation. This excitement is driven by emotion, not logic, and it spreads quickly, creating a contagious sense of urgency. People see others making money and feel compelled to join in, fearing they'll miss out on easy gains. FOMO, fear of missing out, is deeply rooted in our psychology. We're wired to avoid being left behind, so when we see a trend taking off, our instincts push us to jump in, often without pausing to consider the risks or do our own research. Social media supercharges this effect, turning your feed into a non-stop echo chamber of success stories, viral memes, and skyrocketing charts. Every post seems to shout that everyone else is getting rich, except you. In these moments, it can feel like there's no risk at all, only endless upside. The fear of missing out drowns out caution, and the crowd mentality takes over. But hype is always temporary, a sugar rush that eventually fades. When the excitement wears off, reality sets in, and the market can turn sharply in the opposite direction. As soon as the hype dies, prices can crash just as quickly as they rose, leaving latecomers exposed to sudden losses. Those who bought at the very top, driven by FOMO and emotion, are often the first to panic sell, locking in losses and fueling the downward spiral. Smart investors recognize this emotional cycle. They understand that markets move in waves of optimism and fear, and they use this knowledge to their advantage. Instead of chasing the crowd, they buy before the hype begins and sell into the frenzy, capturing gains while others are just getting in. The key is to never let emotion override your research. Take the time to understand what you're investing in and don't get swept up by the noise. Stay disciplined, trust your process, and remember, the best investors aren't victims of the hype cycle, they rise above it. Smart investors do the opposite of the crowd. While others chase trends, they quietly research undervalued, ignored assets. They focus on what will matter tomorrow, not what's hot today. Their edge is deep research, reading white papers, analyzing teams, and understanding fundamentals. They build positions patiently, often using dollar-cost averaging during the quiet phase. When prices drop, they see opportunity, not panic. When hype arrives, they take profits systematically. The average person follows price. Smart money follows value. They act on conviction, not emotion. They move before the headlines, not after. This proactive mindset is what sets them apart. Don't chase the crowd, lead it. Position yourself before the wave, not in it. Let's make this real. Look at Pi. For years, Pi was in its quiet phase, ignored by most, quietly accumulated by believers. The mainstream dismissed it, waiting for it to hit big exchanges. Now, platforms like JB Exchange are changing the game. Early adopters can finally trade Pi, marking the shift from quiet accumulation to price discovery. This is the ground floor, the moment before the crowd arrives. Those using JB Exchange now are the pioneers, acting on vision, not hype. They're setting the first market prices ahead of the mainstream. It's like buying Bitcoin at a few dollars. By acting now, you move from follower to leader. You're not waiting for permission, you're shaping the market. This is how early movers win. Don't wait for the crowd, be the crowd's reason to follow. To move early, you need the right platform. Speed, security, and simplicity matter. JB Exchange is built for early adopters, eliminating delays and stress. Fast, reliable trades mean you never miss an opportunity. Security and transparency give you peace of mind in a new market. No clunky interfaces, no complicated setups, just a smooth experience. Trust is everything, and JB Exchange delivers. It removes barriers so you can act decisively. Participate in Pi's early market with confidence. Don't let technical hassles slow you down. JB Exchange is your gateway to moving before the crowd. Imagine buying a bus ticket early. No lines, best seat, standard price. Wait until departure, and it's chaos. Crowds, stress, surge pricing, and bad seats. You still get there, but it costs more and feels worse. Investing is the same. Act early, and you control your outcome. Wait for the crowd, and you pay more for less. The early birds get the best deals and the least stress. Don't let hesitation cost you. Secure your spot before everyone else realizes the opportunity. The journey is smoother, the price is better, and the outcome is brighter. Timing isn't about luck, it's about action. Don't show up late to the party. Move early and enjoy the ride. It all comes down to this. Will you lead or follow? Followers wait for headlines and hype, buying late and taking the most risk. Leaders act on conviction, moving before the crowd and reaping the biggest rewards. The Pi opportunity on JB Exchange is a classic test. The mainstream is still waiting, but early movers are already positioning themselves. Don't look back in regret, wishing you'd acted sooner. You have the information and the tools. Now it's your move. Wait and follow or act and lead. The choice is yours. Don't wait, lead.